top executives present in the. We appreciate your presence here. Now I will begin this media briefing. To do this honor, I invite our chairman, Sri Dinesh Khara, to address the media and shed the light on the bank's financial performance for Q4 and financial year 23. After which, we will open the floor for question and answers. Sir, over to you, sir.
Thank you. Thank you very much. Very good afternoon to all of you. Thank you for joining this press meet post announcement of our financial year 23 annual results. The global economy is, of course, passing through certain uncertain times. With the cumulative effect of adverse shocks of the past 3 years, most notably the COVID-19 pandemic and the geopolitical situation in Ukraine, manifesting in unforeseen situations. Spurred by the pent-up demand, lingering supply disruptions, and commodity price spikes, inflation reached multi-decadal high last year in many economies, nudging those central banks to tighten aggressively to bring it back towards their target and keep inflation expectations anchored. As a result of all this, the baseline forecast for global growth is to fall from 3.4% in 2022 to 2.8% in 2023 and then rebound to 3% in 2024. However, in this backdrop, India remains resilient to many of the adverse external environment owing to large domestic market. Despite all the headwinds, India's GDP in financial year 23 is estimated to grow at 7%, driven by investment and private consumption. Going ahead, the economic activity would be supported by improving rural demand too. The government thrust on infrastructure spending, revival in corporate investment, healthy bank credit, and moderating commodity prices will also go a long way in terms of supporting the Indian economy. Despite the increase in interest rate and its transmission, credit growth has continued to grow in double digit and has been broad-based across sectors in the financial year 23. During financial year 23, all scheduled commercial banks credit grew by 15% YOY, as against 9.6% YOY in financial year 22, while aggregate deposit of all scheduled commercial bank grew by 9.6% YOY compared to last year's growth of 8.9% YOY. In the Union Budget for financial year 24, several steps have been taken to push up the capital investment in the country, which will eventually boost the credit demand in the country. We expect credit growth to continue in financial year 24 also, although some moderation might happen here and there. In the above economic backdrop, let me now give some color on the bank's number for financial year 23 as well as for the Q4 of financial year 23. I'm pleased to announce that for the third quarter in running, we have posted our highest ever quarterly profit of 16,695 crores. For the full year, our net profit has crossed the landmark number of rupees 50,000 crore, which is the highest ever by any bank in India. Net profit for financial year 23 increased by 58.58% on a YOY basis to 50,232 crores, while operating profit at 83,713 crores increased by 11.18%. ROA of the bank for the year improved by 29 basis points on YOY basis to 0.96%, and ROE improved by 551 basis points to 19.43%. For the Q4 of the financial year 23, net profit stands at 16,695 crores, which is higher by 17.52% sequentially and 83.18% on a YOY basis. Most other core profitability metrics have also improved over previous year as well as sequentially. Net interest income for the year increased by 19.99% YOY on the back of improvement in yields and continued credit offtake. Domestic NIM also improved by 22 basis points YOY. Non-interest income declined by 9.73% YOY, mainly due to the MTM losses which we had booked in the first quarter. It was to the tune of about 7,000 crore. Other than that, our core income streams, that is fee-based income, have remained intact and have improved by 6.84% YOY basis. Operating expenses increased by 13.68% YOY as we have started building provision for the wage revision, which has fallen due from November 2022. There is some increase in overhead expenses, mainly coming through higher tech-related expenses like expenses on IT development, mobile banking, ATM, etc. And also the higher DICGC premium because of the growth in deposit. On the business front, credit growth has been robust across all the segments. Domestic advances grew by 15.38% YOY, headlined by retail personal advances, which grew by 17.64% YOY, and corporate segment witnessed a growth of 12.52% YOY. SME and agri segment have also witnessed a healthy double-digit growth at 17.59% and 13.31% YOY respectively. Domestic deposits grew by 8.50% YOY, driven by growth in savings bank deposits and term deposits. Our foreign offices have continued to perform well with good growth in advances as well as deposits. With respect to asset quality, our gross NPA ratio has come down by 119 basis points YOY and stands at 2.78%, which is the lowest level in more than 10 years. Our net NPA ratio has also declined by 35 basis points and stands at 0.67%. Slippage ratio for the year stands at 0.65%. The consistently improving asset quality is also reflected in our credit cost, which is at 32 basis points for the year, is down by 23 basis points on a YOY basis. We have a well-provided stress book with PCR showing improvement by 135 basis points at 76.39%. PCR including OCA improved by 170 basis points and is at 91.91%. On the restructuring front, our total exposure under COVID resolution plan 1 and 2 stands at 24,302 crores as at the end of quarter 4 of financial year 23. The restructuring book has behaved very well and is within the expected numbers. And even if we reckon SMA 1 and SMA 2, the book is actually shaping up much better as compared to what we normally observe in the SME subsegment. We are holding sufficient additional provision against these restructured accounts. The bank remains very well capitalized and we have sufficient headroom to take care of the normal business growth requirement. Our capital adequacy ratio has improved by 85 basis points on a YOY basis and stands at 14.68%. CET1 ratio has also improved by 33 basis points and is now at 10.27%. And both the ratios are well above the regulatory requirements. Digital continues to be an important customer acquisition engine for the bank across assets as well as liability products. During the year, we have sourced 64% of the savings bank accounts and 35% of the retail asset accounts digitally through YONO. We have embarked upon a journey of creating digital bank of choice within the bank as we have moved on to YONO 2.0 for further improvement in our offerings. Our subsidiaries have also consistently performed well and continue to create significant value for all the stakeholders and most importantly for the customers. Most of our subsidiaries are the leaders in their respective segment. We will continue to nurture these subsidiaries and see them creating value for their own shareholders as well as the shareholders of SBI. Before I conclude, I would like to thank you all for your continuous support to the bank. We consider it as a privilege to be able to contribute towards the growth of our economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long term. I wish everyone here the very best of health and happiness. Floor is now open for your questions. Thank you.
Thank you so much, sir. Now we move to the media Q&A. I urge the media to raise their hands and unmute themselves when called upon. We request you to follow the format and restrict yourself to 2 questions each related to the results. First up, we have Ritu Singh from CNBC TV 18. Ritu, please go ahead.
We are unable to hear you, Ritu.
Okay, Mr. Khara, if you can hear me.
Yeah, please go ahead.
Sir, the asset quality, of course, has seen a significant improvement year on year. What we wanted to understand is, in terms of provisioning, what is the thinking? For your NPA provisions, you've almost halved them in the quarter. But with the expected credit loss provisioning expected to kick in the next couple of years, what have you factored in terms of what you would require? Is there an internal assessment? And have you started to make any provisions for that? One. Secondly, also, sir, in terms of your slippages, from 25,000 crores in FY22, now it's down to about 18,400 for the year. Could you guys guide us as to what you're seeing in the coming year as well? The fresh slippages have come down significantly. Is that trend going to continue to play out? And as far as demand for credit is concerned, yes, it's been in double digits for the year. Interest rates have also peaked. Now they're expected to come down. What's your sense? What's in the pipeline? Where is the demand coming from? Are corporates utilizing their credit lines? If you could give us some guidance there as well.
I think one question itself is quite a heavy questions. Multiple questions in one question. So you have taken the full advantage of the clause one question. Anyhow, I'll start with the first one, which you have in your mind is something which is very heavy on your mind, is relating to expected credit loss. Well, of course, first and foremost, this is just a concept paper which has been introduced by RBI, and they have not yet formed up their views. And even if they have very clearly indicated in that concept paper also, even if it gets introduced, it will be spread over a period of 5 years. Now, let me share with you. When it comes to the ECL, it essentially means that the provision would be made based upon the expected credit loss. And expected credit loss is a probability of, one is a loss given default, LGD, and also the probability of default. So which is nothing but a reflection of the underwriting standards, and also at the same time, how the book has been. Herein, I would like to draw your attention to the fact that our is provided to the extent of 98%. And when it comes to our retail component, which is almost as high as about 42, pure play retail is about 42%. There our NPA, gross NPA ratio is somewhere in the range of 0.6. So one, I would like to say that the loss given default as it is low. And even the probability of default, which is nothing but a reflection of the underwriting, what we have seen for last couple of years is a very clear reflection of our underwriting standards, which we are adhering to. So in that kind of a situation, I would like to mention that our non-NPA provisions as on date stands at about 35,500 crore plus. So as far as our readiness is concerned, we will simply wait for the RBI guidance in this matter. And once the guidance comes in, we are very well equipped to deal with the scenario. And at some stage, we have done some calculation, but those numbers are much lower as compared to what additional provisions we are already holding in our balance sheet. So first and foremost, ECL as of now is a fiction. And if at all it becomes a reality, we are very well equipped to deal with without having any impact on our balance sheet. We have always followed the principle to insulate the balance sheet fully, and our balance sheet is completely insulated from any future potential events also. Now, your second question, which I can recall, was essentially relating to the, the growth numbers, whether it is credit growth guidance. And also, your one question was relating to whether the kind of slippages which we are seeing, how will it look like going forward? I think, to my mind, the best of the answer for this question would be to look at our SMA-1 and SMA-2 book, because this is nothing but a reflection of the likely stress which could be there in the book. So, if you look at our SMA-1 and SMA-2 book, we have seen very clearly that there's a definite reduction in the SMA-1 and SMA-2 book over the period of time as compared to March 22, where it was 3,544 crores, SMA-1 and SMA-2. It peaked out somewhere around 8,000 odd crore in September 22, but again it has come down to 3,200 odd crores. We are in a position to have a very effective follow-up mechanism, and we are in a position to ensure that we recover all these stress accounts. So I think, to my mind, the quality should be what we are seeing today. We should be in a position to sustain. The third question was essentially relating to the growth. I think we are witnessing decent growth both in corporate and retail, and also even in SME as well as in agri. So I think, to my mind, the kind of activity which we see on the ground, which very clearly means that we should be in a position to address the economy's growth requirement. And I would like to also add that the macro aspect is something which will be a very, very critical component. And the kind of focus which is there in the economy for the economic activity, this will certainly offer us opportunity to grow as far as our loan book is concerned.
Thank you, Ritu. The next question is from Siddhi Nayak of Reuters. Siddhi, please go ahead.
Hi, so Siddhi here. Just wanted to take forward Ritu's question. So credit growth, if you could provide any number, any guidance for FY24? And in terms of corporate loan demand, which sectors are you seeing this demand coming from?
See, I think in the past also I had given the number around 12 to 14% kind of a growth, which we are quite hopeful to see. And of course, this is all based on what we are observing in the economy and the kind of steps which are being taken by the government as well as the initiatives being taken by the corporates. So this is something, to my mind, this is likely to be a reality. Now, your second question is which sectors? Retail will continue to grow. Apart from that, SME also offers the opportunity, and even in the large corporates, we expect to see traction into the infrastructure related activity, which would be road, which would also be, when it comes to renewable, is holding a huge potential, and we are seeing very good traction in the renewable, right from EVs to batteries to the solar panels to solar engines. Solar cells. So all these are the sectors which will continue to offer a decent opportunity for us to grow.
So one more question is, since you've guided for like a 12 to 14% credit growth, wanted to understand on the deposits front, what would your guidance be for FY24?
See, as far as deposits are concerned, I would like to add that as of even today, we're sitting on excess SLR of about 4 trillion. So for that matter, we don't feel pressure as far as the deposit is not going to be a limiting factor for us to grow our loan book. And already, I would also like to mention that when it comes to corporates, about 1.75 trillion worth of proposals are already in pipeline. And also, when we look at the proposals which we have already sanctioned and also awaiting disbursements. Even that amount is somewhere around 1.78 trillion. So all said and done, about 3.5 trillion worth of proposals are either in pipeline or they have already been sanctioned and are likely, documents are likely to be executed.
Thank you, Siddhi. The next question is from Ankur Mishra of ET Now. Ankur, please go ahead.
Hello, Mr. Khara. My question is regarding your statement, some moderation in the credit growth in the year ahead. You have mentioned about 12 to 14% growth might be possible in this fiscal year. I want to understand particularly on the corporate side. This quarter, it has been around 12%. Do you see some moderation there as well?
No, see, it's a overall 12 to 14% which I have indicated. So the various components of that 12 to 14 will be spread across. But the kind of activity which we see on the ground, I think corporate, we expect that we should be in a position to see somewhere around 10 to 12% kind of a growth in corporate book.
Another important factor which I could see in the result was the sharp decline in the provisions. How should one read into it? Quarter on quarter, you are surprising market with that.
It is attributed to the better quality of assets which we have. And also by virtue of that, we are not required, we are not compelled to have any aging provision because of better quality of assets.
Okay, thank you so much.
Thank you, Ankur. The next question is from Abhijit Lelia of Business Standard. Abhijit, please go ahead. Abhijit, if you could please unmute yourself.
Mr. Lele, we are unable to hear you.
We'll take the next question from Vishwanath Nair of BQ Prime. Vishwanath, please go ahead.
Hi, sir. I hope my voice is clear.
Yeah, you're audible. Please go ahead.
All right, sir. Quick question on the write-off segment, because that is where that number really, struck me at about 15,000 odd crore for the full year. I'm just curious to understand the strategy there, because yes, you already have a pretty clean balance sheet. But then is write-off still a big part of your overall NPA management strategy, or will that likely come down in FY24? That's one. The other question I wanted to really understand from you is this push on infra and renewables. Where is it showing up in real asset terms on the ground, sir?
Well, as far as the write-off is concerned, there is a process which we follow. Once we have 100% provided for, that is the point of time when we take them to OCA. And once the OCAs are subject to review, almost about after 8 quarters, we go for the write-off. So it's not a strategy, it's a process which we follow. So that is something which I would like to highlight. So I think because 100% provided for, we do make efforts. And if at all we recover, even if we write off, the right to recover does not get extinguished. Let me just clarify on that. So I think this is a process, and this is from the balance sheet perspective what we do. Now your second question is relating to, sorry, I seem to have lost thread on that.
On the corporate credit side, sir, you've said that there are about 1.75 lakh
you are talking about the infra.
Yeah, that's right. So I'm just talking about where are these assets showing up? Is it still a very government-led approach? Are there a lot of private players also in there?
No, it is actually a combination of both. As far as renewable power is concerned, many of the private sector players are also there. When it comes to EVs, it is all private sector. When it comes to batteries, it is all private sector. Only in the renewable sector there would be some participation from the government. Otherwise, the rest of the initiatives are all in the private sector.
Thank you, Vishwanath. So the next question is from Joel Rebello of the Economic Times. Joel, please go ahead.
Mr. Rebello, we are unable to hear you.
Sir, it took some time for me to unmute myself till they give me an approval. I can't. Can you hear me clearly now, sir?
Yeah, I can hear you. Go ahead, please.
Thank you. I first of all, a clarification, sir, before my question. This commercial Indo and SBI global factors where you all have increased stake. How much did you all invest, sir, in this to increase the stake?
It used to be a joint venture between State Bank of India and Canara Bank, and we have only bought the stake of Canara Bank, and it was going on for quite some time. How much is the amount? I really.
Okay, but how much have you all
It's a very small
put
number.
together these two?
It's a very small number, but I will try and get it. Yeah.
40 crores or something, but we'll.
Something like a too small entity. Yeah. Global factors was
Hello?
68 crores.
Hello?
Both together, maybe less than 200 crores.
Yeah, go ahead. Anything else?
Joel, can you hear
Hello?
us?
Yeah, anything else?
I'm muted.
Next question is from
Hello?
Sayan Ghosh of Mint.
Yeah, hi, sir. Sir, a couple of questions. The first thing is, do you think that the deposit rates have peaked or you see more hikes in the near term?
Well, much of it will be a function of how the market will be looking at the overall deposit market. And well, of course, some part of what we have seen in the past is essentially on account of the increase in policy rates. But part of it is also attributed to how is the credit deposit ratio of various banks. So I think it will be a function of multiple factors. So these are some of the variables which will really influence
Hello?
the interest rate on the deposits.
Right. Sir, another thing on your Gift City. So given that the Gift City loan book as a percentage of your total international banking has gone up from last year, I just wanted to understand, sir, what is driving it and what kind of business do you see in the IFSC branch in FY24?
Gift City is, of course, we have a branch over there for some time, and we do intend to really tap all the potential opportunities which can be tapped from the Gift City branch. Some part of it is also post SVL also. We could have some of the dollar deposits coming in through the Gift City. So this is based upon what all can be tapped through the Gift City line of activities.
Right. Sorry, sir, if I can just slip in one more. Yeah, please.
Shan, if I may add, actually, we would be essentially be making Gift City as a hub for raising our liabilities, basically the bond program and other deposit raising program. And so the recently raised, bonds are also listed in the Gift City. That is going to be our main focus.
Right, sir. And if I may just add, sir, on the asset side, are you seeing ECBs being raised from your Gift City branch as well?
No,
wherever
ECB can be raised from, ECB more important is
The price.
who are raising and what pricing. That is more important. So I think it's only a parking could be through Gift City, not that it can be through Gift City or any other center wherever they can have the liabilities at the right price.
All right. Thank you, sir.
Thank you, Shayan. The next question is from Mayur Shetty of the Times of India. Mayur, please go ahead.
Thank you. So congratulations on the 50,000 crore milestone. And my question was on the interest margins. Do you see scope for improvement given that you still have surplus liquidity and there's scope for credit growth? And are you all getting some more pricing power when it comes to corporate loans?
Yeah, we do see some scope for improvement in our NIMs.
And so since your surplus funds, is the pressure to raise deposit rates no longer there now?
No, actually, we have been maintaining one particular fact that deposit is a franchise. So we have to take care of the depositor's interest also. Keeping that in mind, in some of the buckets in term deposit, we have raised the interest rate in last about 6 months or so. And I think that will be our strategy going forward also.
Thank you.
Thank you, Mayur. The next question is from Ram Kumar of the Hindu Business Line. Ram, please go ahead.
Hello. Sir, just wanted to understand, you have increased your standard asset provisioning. So, from these accounts belong to which sectors? And do you see any kind of trouble of these accounts slipping actually? Yeah.
See, standard asset provisioning goes up when the loan book grows. If at all we have got a larger standard asset in our loan book, naturally standard asset provisioning will go up, no?
Okay.
Yeah, it is
And
universal.
no, I thought that you might have made additional provisioning for some
No,
sectors.
nothing like that.
Okay. And second question is regarding, your investment in Geo Payments Bank. There was some plan to divest the stake. So how far has that plan come?
At the material point of time, we'll share with you. It's not that big an investment either.
Thank you.
Thank you, Ram. The next question is from Alek Angre of ET Prime. Alek, please go ahead.
Hi, sir. Your overall NPA, am I audible?
Yeah, please go ahead.
Yeah, so overall NPA number seems to be in control, but particularly agri is something we have double-digit numbers. Now, in the context of state elections, we have generally seen behavior in the agri portfolio. Have seen jump in stress numbers. So, some guidance on that. And my second question is, when you took charge as the chairman of SBI, one of the things that you had mentioned, street not attributing. You have mentioned about the price to book value as being lower despite having so much the growth opportunities, subsidiaries opportunities. Given the share price run, are you happy now, and also given the growth potential, what would be your thoughts on that?
Uh, the first question, which is relating to
Debt relief.
debt relief. See, the point is that agri NPA, you would have observed that it has come down from about 13% to about 11%. And it's a sharp reduction if you look at the behavior which we have seen for past many years. And we are quite hopeful that we should be in a position to bring it down to below two-digit number also. And we actually don't perceive much of a challenge in doing that. So I think our operational support subsidiary, which has come into operation about 6 months back, it has already started contributing in terms of improving, giving us the support for improving the agri book. So elections, I would not like to comment on that particular aspect. More important is the kind of a climate or the effort for recovery. We'll continue to develop our efforts for recovery and see to it that our book remains of high order. We will rather improve the NPA position in this book also. And I think there's a greater appreciation. What we have done is we are now engaging in terms of connecting with our rural customers. We are educating them in terms of what are the gains of keeping their accounts in order and how it will really help them in terms of having more and more facilities. So we are seeing the positive results of these initiatives which we have taken, and I'm sure it will help us going forward as well. Your second question is relating to the price to book value. I would also like to mention that you would have seen a definite improvement in the book value over the years also. So I think it's always a dynamic situation, but I would only like to mention Dil Mange More.
Okay. So if I could squeeze in, there were some plans about Yono 2.0. You have floated a tender also in terms of engaging with an IT company. What has been the progress on that?
It's progressing at a
Good pace.
at a reasonable pace, at a good pace.
Any timeline, sir, if you could share?
It's too early and not for this event when we should talk about the timelines.
Sure. Thank you, sir.
Thank you, Alek. The next question is from Preeti Singh from Bloomberg. Preeti, please go ahead. If you could please unmute yourself, Preeti.
Yeah, sorry. Hi, Mr. Khara, congratulations. So I have two questions. One is, your results are really good, but I'm trying to understand why the share price has fallen today after the results. So if you can shed any color on that. And the second question is really related to, we've been reading about the challenges with processing payments for crude oil. Wanted to check how you're doing that and what currencies you might be using for those payments, and if there are any concerns that you might have.
Your second question, I would like to mention that we are fully compliant with the law, and there is no question of our doing something which is outside the provisions of the law. Your first question was relating to
Share prices.
share prices. That is actually not, it is beyond my remit. It is probably for the shareholders or the market to really respond. I would not be in a position to really get into that.
Okay, if I can just slip in one more question, sir. So I noticed that, while your deposit growth was about 9% year on year, there seems to have been an uptick in the last quarter. Maybe could you share some thoughts on, how and why this deposit growth happened, or what you did?
No, we had actually introduced a new product in the last quarter, which was a term deposit, which was 400 days term deposit. And also we had also introduced non-callable deposit. We have seen a reasonably good traction, almost about, if at all I'm not mistaken, about 89,000 and plus 6,000, about 95,000 crore we have raised in about last 2 months or so in this particular subsegment of these two products.
Thank you, Preeti. We'll take the next question from Piyush Shukla of the Financial Express. Piyush, please go ahead.
Hi, sir. Good evening. Good afternoon. Two queries, sir. One is on OPEX. What is the guidance? It's up nearly 23% on quarter on year-on-year basis. So on OPEX, and secondly on your stake coming down in Yes Bank to 26 after the issue which was done by the bank recently. Any plans to further sell stake in the bank in this fiscal?
Well, as far as OPEX are concerned, we have a situation where we have started providing for the wage revision, and this started from the month of November onwards. So almost about 500 crores we are providing every month. So I think we are trying to ensure that there shouldn't be any extra burden as and when gets finalized. The second question relating to stake in Yes Bank. Well, of course, we have not yet taken any view at a board level. Once we take some view at a board level, we'll share with you.
And incidentally, the share came down because of the preferential issue of shares by the S Bank to a set of shareholders. We have not sold our stake.
The next question is from Joel Rebello of the Economic Times. Joel, please go ahead.
Thank you for the opportunity again. Sorry, I don't know. I just lost connection. I don't know if you've answered this question before because I'm in and out of this. I just wanted to understand what's your outlook on asset quality, sir. Y'all gross NPAs at 10-year lows, slippages, I think one of the lowest I've seen in recent times at least. And recovery is also good. So what's your outlook? I mean, are we at the lowest point of asset quality, in the best point of asset quality? What's the outlook on asset quality from here?
Our effort and endeavor would be to keep this best point sustainable.
But do you expect that to continue in the sense, what's the situation like? I mean, how are you seeing?
The point is, the issue involved is that we have significantly strengthened our underwriting practices.
Yes.
And we are on the top when it comes to control and follow-up. So whatever is within our control, we are doing the best. So also we are very closely monitoring SMEs. So
Right.
if you really look at the SMA numbers as compared to last year, we are down even on a YOY basis. We very closely monitor these SMEs, and which eventually help us in ensuring that we have an excellent quality of the follow-up and recovery. So this is something which has become part of our DNA, and it should help us in ensuring the quality of the book.
Good to know, sir. Last question on corporate growth. If I'm not wrong, I think the corporate growth is pretty brisk. It's, I think, beaten retail growth also. So what's the outlook like for corporate growth? Where is this demand coming from? You mentioned some sectors, you mentioned the pipeline, but where is this demand come from? Is it still working capital? And what are the sectors you're looking for? What is the outlook? Can you give us some
It's more of a term loan driven demand, as I was
Yes.
mentioning,
Yes.
that already when it comes to the renewable energy, EVs, batteries, and also all these are the sectors where there's a demand which we are seeing, and also there is a capacity addition in some of the infrastructure sector also, which is core sectors also. So that is the other area where we are seeing the demand. So I think it is all universal. It is all very well distributed demand.
Yeah,
It is
absolutely,
not
sir.
confined.
Roads, ports, aviation, each one of this segment is showing a promise. And as mentioned already, there's a good amount of sanctions that are in the pipeline likely to be disbursed. But in any case, the guidance would remind that the corporate book is expected to grow between 10 to 12%.
Thank you, sir. Thank you, Joel. We'll take the last question from Abhijit Lele of Business Standard. Abhijit, please unmute yourself.
Now, good afternoon. Are you able to hear me now, sir?
Yeah, please, Abhijit ji. Go
Okay.
ahead, Lele sir.
Last year, you had spoken about monetization of stake in two of the subsidiaries, SBI General and SBI Mutual Fund. That will be part of the capital mobilization. What are the plans this year?
I think we have already improved our capital adequacy ratio. It is now at about 14.68. So these are the entities which are nurtured, and moreover, mutual fund is not an entity which requires huge capital either. So I think all that decision we had kept in abeyance for the time being. If need be, we will revisit that decision at some later date.
And on the 81 and 82 bonds, what could be perhaps in this year the market rate?
Yeah, we will be actually going to our board for seeking the approval. So once we have, and that will depend upon what is the likely growth in our balance sheet. Though currently with this kind of a capital adequacy, we can actually support the balance sheet growth of about 7.1 trillion. So we will be taking call, and we'll be approaching the board for the necessary approvals for raising 81 and 82 also.
And the last one is about you 3 financial years having under your leadership. How you see the journey?
Sorry?
The bank has seen 3 years of financial years under your leadership. How you see the performance?
Oh, thank you. No, I think it has been quite exciting, despite the fact that the environment has been very, very challenging. But still, thanks to the team SBI, we could navigate those challenges well. And I think for a greater part of these 3 years, every quarter we have set a new record in terms of profit. But for only one quarter where we had a huge MTM depreciation. But I think overall it has been quite satisfying.
Thank you so much, everybody, for your presence and your participation. Thank you for the management for their time. Have a great day ahead.
Thank you. Thank you, everybody.